Are we on the verge of a different housing market in the Phoenix area? We might be. With demand going down and inventory going up, we might be on the verge of some change. So let's get into it. More listings, lower rates should boost 2025 home sales. Now, I'm starting with this nationally because I think this is important to address. Fannie Mae is changing their forecast for this year. They're basically saying 2024 is not the rebound year that they expected. So 2025 is going to be it. They're saying that more listings are starting to come to the market, particularly in the Sun Belt. They call out specifically Texas and Florida here, but Arizona is seeing some of that too. The economy appears to be slowing. Recent readings offer hope that inflation is cooling after progress on that front stalled in the first quarter. Additionally, the labor market is showing signs of a gradual slowdown. They're saying home sales won't pick up until there's some combination of continued household income growth, a further slowing of home price appreciation, or a decline in mortgage rates to bring affordability within range. And they're saying that there will be a rebound in home sales in 2025 now. So we'll see if that is true. We're halfway through this year. They've basically thrown in the towel and said it's not going to be this year. Sales of existing homes fell 1.9% in April to an annualized pace of 4.14 million. I've talked a lot about how the existing home sale market is different than the new home sale market. And we're going to talk a little bit more about new home sales today and new construction because they are behaving a little bit different. So really what is interesting is they say that the sales softness is happening while listings continue to rise. And basically, we've talked about the lock-in effect that sellers do not want to give up their low interest rate, therefore they're not selling their home, and that's locked in some inventory. But they're saying that even though there's that theory, sellers may have kind of come to terms with the fact that rates are not coming back down, and they're listing their homes if they actually need to move or they need to do things. They're not going to let that hold them back. Meanwhile, we don't have buyers that can really afford that. So we don't have the demand. So that is what this article is kind of talking about, is saying there's those affordability constraints. And it seems like this inventory is coming to the market because sellers are kind of like, well, I'd love to keep this rate, but really I need a bigger house, or I really actually need to do this. So they're kind of at that point where they're giving up that rate. So speaking of affordability, according to Zillow, buyers need a $127,000 down payment to afford the typical mortgage payment. So they looked at the median household income, what they would need to put down in order to make their loan amount low enough to have a mortgage payment that's affordable based on that median household income. So they're saying they would need to put down 35.4% to afford the payments on a typical US home. And a typical home is affordable to a median household income with 20% down or less in 10 of the 50 biggest US markets. So that's not very many places. And last year, 43% of home buyers used a gift from family or friends to help them with the down payment. They give a few examples in this article, one in particular talking about Seattle. So in Seattle, a median household income making around $116,000 would need about $462,000 to lower the debt enough to comfortably afford the monthly payment on a typical home, which is worth about $753,000. That is a lot of money. And they're saying it would take 24 years to save that up on if you're making that median household income. More affordable markets like Atlanta, they call out, would need more than $118,000 saved for a 30% down payment. So all in all, this article is just really not that rosy in terms of affordability, unfortunately. And, every market is different, and the median incomes in various areas of the country is different as compared to the home price there. But, it makes sense why 43% of last year's buyers used some gift funds in order to buy a home. So something's got to give here eventually, right? So we've got active listings that's just continuing to stay elevated as compared to the past few years. Now, 16,000 listings on the market is not a high number of listings for Phoenix historically, but it is more inventory than we've seen over the last 4 or 5 years, and it seems to be keeping that way. We're not seeing big spikes, we're not seeing it drop down, but this is something for us to watch, especially knowing where we're at with buyer demand. Now, I think this is important to share. This is the Cromford Market Index, and this is showing supply and demand. Right now, this is where we're at. The red dot is demand, the blue dot is supply. They're very, very close. So we're pretty much in a balanced market because supply and demand are meeting one another. Now you'll notice that this yellow zone right here is kind of our normal area for supply and demand, and both supply and demand are below normal. We have lower supply than normal. We also have lower than demand than normal. So therefore, when these two factors are both below normal, that's putting us into a place where we have lower transaction volume, right? Because there's not a lot of supply and there's not a lot of demand for that supply. Now, what happens when this changes is you can see in the past, we've really just had demand above supply, this red line, this whole time. And we have not seen the blue line of supply really go over demand all that much. A teeny bit there, a teeny bit there. But if we go back in history, we see this big jump where supply went way above demand. Demand went way down while supply went way up. And this is in 2006, 2005, when this really started. And then we all know what happened from there. So what happens when supply gets above demand? We have a buyer's market. And what happens in a buyer's market is we see prices start to come down, right? So this is what it looked like before the 2008 financial crisis. And what is interesting, though, is supply and demand were both above normal at this time. So we were seeing a lot of transactions taking place, a higher transaction volume, and then supply went above demand, demand went down, and we went into a buyer's market for some time. Now, where we're at today, we have supply and demand that are meeting together. Whether or not they cross remains to be seen, but both are below that normal range, which is why we're seeing lower transaction volumes. So this is what I'm talking about where I'm saying, are we on the verge of a different market? Maybe. We may be on the verge of a buyer's market if these two cross. So we'll have to pay attention to what's going on there. Now, some good news for buyers. We had some movement in mortgage rates for, the last 3 weeks has been promising. It's been bit by bit. We've seen the smallest changes in mortgage rates, but here we are at 3 consecutive weeks. The average rate on a 30-year loan declined to 6.87%. So that is good news if you're a buyer out there. If you haven't heard this news yet, make sure you're checking in with your lender to kind of know where you stand as far as qualifications and payments. But this is where we are at the end of last week. So we'll see if that continues. I think we really need to get into the low 6s to really see demand start to come back. And at this point in time, I haven't seen any direct impact in the market from rates going down. Now, if we look back to earlier this year, this spike right here is where we saw a big drop in mortgage rates at the beginning of the year. This was like January and February. And we saw the number of existing home sales really tick up because of that. So this is really just showing that mortgage rates do make a really big difference in buyer activity out there. And if we can get back to this range again, we'll probably see an uptick in home sales. So if rates go down to where they were at around this time, if we look back to like January of this year, February, we were at like 6.6, a little bit above 6.5. So we may not need to get into the low 6s to see activity pop up again. Historically, at least when we look at what happened earlier this year. We'll see where mortgage rates continue to go. Now, in the comments last week, I had a number of questions about new construction. So let's take a look at that. And by the way, if you're new here, make sure you consider subscribing so you can be part of our community going forward. And would love if you share this with someone who would find it valuable. We're here every week talking about Phoenix real estate. These are the single family permits year to date. We're at 10,000, almost 11,000 year to date in the Phoenix area. And if you compare this to last year, we're like almost double the number of single family permits compared to last year. Now, the previous years, we were at 12,000-ish. And then before that, much lower. And it was kind of just a steady growth. So you can tell that in terms of single family permits, we have really kind of rebounded from last year. We're doing a lot more with those single family permits so far this year, which means builder confidence is likely a little bit higher than it was last year. Single family permits basically means that builders are pulling permits to build homes. So this is, for future development. We can also look at the number of home sales. This is new home sales year to date. We're at 7,486. Now, compared to last year to date, we've had more new home sales. Not surprising because last year home sales in general were not great, one of the lowest years we've had in 20 plus years, I think it was. And so this year we're outpacing that, but really not by much. The last time we had more new home sales was 2021, and that was a really different market at that time. So we are seeing a good number of new home sales taking place. We are seeing a good number of permits being pulled. So I think there's going to continue to be growth in new home construction throughout the Phoenix area. And the benefit of new home construction as a buyer is builders are offering a lot of incentives and rate buy downs and things like that to get buyers interested in and be able to afford a new home. With existing home sales, it's not quite as flexible. So new homes can be a great opportunity to get into home ownership and possibly have a better mortgage rate because you can get some incentives for them to buy down your rate, cover your closing costs. They can be a little bit more flexible with that stuff, which is also why we're seeing the new home market do better than the existing sales market right now. Now, as far as new construction is concerned, we saw the permits, but just a few articles to share what's actually going on out there. Mattamy Homes on track to more than double its valley footprint. Builders set an Arizona division record with 759 homes sold in 2023. They're getting into the Queen Creek market. They are developing 6 new communities totaling 1,473 homes in Metro Phoenix, and all of that will open this year. They are trying to get to a point where they're building about 1,100 homes a year. So some of these are in existing master plan communities. Some of it is in areas where they have built land or bought land and they're going to be building their own communities. If you look at some of these other news articles, Silver Sky in Paradise Valley, Landsea is beginning some building. Toll Brothers has a new community in Gilbert, 7,000 build to rent units in Phoenix pipeline. There's just a lot going on with new construction. So pretty much everywhere you look, you're starting to see more of that. And single family is one thing, but multifamily is where we're seeing a lot of building going on. Now, just to give you an idea of what's out there, this is a new home search tool that we have, and you can actually access this and use it on your own if you'd like. If you're looking for new construction homes, check the description below. We have a link for that. But these are all of the new construction communities out there and what options are available with each. And I mean, as I zoom in, you can just see so many pin drops on the map. There is a lot. There's a lot going on with new construction. So hopefully that answers some of your questions. Now, I want to talk about rentals because there was a question about rentals, and I think it's important to point out what's going on in that market. Do you see this uptick here? This is the number of listings on the market for rentals. Now, this is where we're at today. The beginning of the year was about here. So we've seen a pretty big increase in number of rental listings on the market. And what does that do with prices? It brings rental rates down. Now, this is the list price of rental rates, so it's not the lease price of what they closed at, but you can see landlords have had to decrease their rental list prices in order to get tenants, most likely because these rates have come down. Now, this is since March, but I think it's about like 18% decrease from on that rental rate listing from March until today. So as a renter, good news for you. You have more options out there and possibly some lower prices. But as a landlord, not the best news for you. We're seeing the most increase actually in rental listings for apartments. Those are up like 34% year over year. For single family homes, the increase in listings is about 9%. So not quite as dramatic for that, but still a good number of new options on the market this year for rentals. Now, last week I talked about the number of listings under contract being the lowest that we've seen since 2007. And I had a few comments saying, of course, we're going to have lower listings under contract when we have low inventory. And I wanted to point out that we actually have higher inventory than we did in the past years. And when we had lower inventory, we had a higher number of listings under contract. And I know that sounds counterintuitive, but let me show you. So today we're sitting at about 16,000 active listings. And if we go back to a year like 2021, around the same time of the year, we're sitting at about 5,500 active listings. And when we look at the number of listings under contract, today we're sitting at about 7,000 under contract. And in 2021, this week, we had 10,000 under contract. So remember, lower number of inventory and listings on the market, but higher number of listings under contract. These are weekly counts. So this is the number of homes going under contract on a weekly basis. And so maybe that wasn't clear when I was sharing this last week. But that's why we can have these weeks where we're seeing the number of listings going under contract now being less than the number of listings going under contract when we had lower inventory and homes on the market. What was happening back then is we just had listings coming on the market and going right off the market. So we had a higher number, a higher demand, higher number going under contract, even though we could never sustain the same number of listings on the market at that time. So hopefully that helps clear some of that up for anyone who was wondering. And let's just jump into what's going on with the Cromford Market Index. We're at 103.6, which is a balanced market. Demand and supply still hovering around the same numbers generally, not making a ton of big moves, but this is what it looks like on the graph. Just kind of making a downward trend through this year ever since, let's see, when was this? End of February. We've just started to go down, and nothing too dramatic, but this whole half of the year has been just kind of a softening as far as the Cromford Market Index goes. Now, if we look at every city and its respective CMI, we see overall the average change month over month is about negative 5%. Last week it was negative 3% or so. So definitely seeing more momentum in the direction of a buyer's market and away from a seller's market. Chandler has been the strongest seller's market that we've had throughout Metro Phoenix, and this has decreased by 5% when we look month over month. Fountain Hills as well has lost some ground. Most of these cities are moving away from a seller's market and into a buyer's market, with the exception of Avondale, Tempe, Cave Creek, and Maricopa all still have green arrows. So overall, the market is really softening, kind of weakening for sellers and getting better for buyers as we're seeing more inventory out there. So just something to keep in mind if you are listing your home on the market. You do want to be competitive with your price. You do want to make sure the condition is good. You want to make sure there's not a lot of maintenance items. You want to make sure it's staged appropriately, it's clean, all of those things. We're back in the market where a lot of that matters. Unfortunately, a lot of it didn't matter for a few years, but buyers are very picky out there and they want things to be in good condition when they're paying so much for a home or a monthly payment or whatever it is. It can be a stretch for a lot of people right now, and they're not willing to make a concession on that unless it's exactly what they want. So here's a visual of what's going on. I just put this back to March, so it hasn't even been that long, but this is the contract ratio from the Cromford report. It's going to be hotter in those zip codes where it's red and yellow, and then cooler in those zip codes where you see the green and the blue. So if we just push play and have this run from March until today, you'll see how some of this red and yellow kind of switch around to different zip codes. And then as we get into the end of May, a lot of this red and yellow just kind of starts to disappear. We're seeing a lot more of green and blue with very few red and yellow zip codes. Now, does this mean we're in a cold market? No. It just means we're in this balanced warm area for the majority of the valley. There's a few areas that are still warmer and hot, like Chandler still has some of those places, Tullison, a few places in the East Valley, North Phoenix, Central Phoenix. But for the most part, we're in this balanced, warm market. So as a buyer, it's good news because you might have a little bit more negotiation power. And as a seller, just make sure you're on your game when you're listing your house because it's going to take a little bit of time to sell, most likely, and there's going to be some negotiation. Buyers, if you are interested in new home construction, don't forget to check out that link below where you can search all the new construction opportunities in the Valley. And hey, if you guys have any particular questions, drop them in the comments below and I'll do my best to get to it on next week's market update. I'll see you guys then.